Now for a check of today's business news, joining me is Chief Market Strategist at InvestSMART, Evan Lucas. Evan, good morning. Good to see you. We are getting closer, of course, to the US debt ceiling deadline. Are markets starting to get nervous in anticipation?
Yeah, good morning, Danica. Yes, they are. Last night, we actually finally saw that the politicking is going to get harder. Although we keep hearing from Kevin McCarthy and also from the president that they are amicably debating and that they're getting closer and closer, there was signs last night that it's actually still a reasonable way away. The deadline is next Thursday, and last night was the first time markets really started to price in the risk around a possible default. If you have a look at any maturities on US Treasuries in June, they are now higher than everything outside of that, which is very unheard of because short-time maturities should be really, basically almost exactly the same as they were issued, and they're about 7 basis points higher. You also saw that in US markets for the 4th day in a row, a 1% decline. So this is what we've seen over the last 4 debt ceiling negotiations, but it's the first time this time around that markets are finally getting nervous and the risk of default is getting there. We even saw Janet Yellen last night, the Treasury Secretary, saying that they will run out of money on June 1st. And realistically, to get it all signed off, all done by Congress and then by the White House, the deal has to be done by Friday so that it can all be cleared. So watch this space. It's getting very close to the wind.
Yeah, it's certainly getting very close. And there's also debate about the US Federal Reserve's next move. Did the minutes give us any possible clues?
Well, it's getting to a coin flip now, Danica, in terms of what the board thinks. They are certainly showing signs of slowing down, but on Friday, we have their preferred measure of inflation. So the personal consumption expenditure numbers are out, and they're all still expected to be in the mid to high 4% range year on year. And also on the core is the same thing year on year, about mid 4s. That's still over double what they need. And that's why this week you've seen Fed members saying that a further rate rise in June is there. So we might get past the debt ceiling and then 4 days later start talking about what happens in June 16 when the Fed meets down the road at Constitutional Avenue. It's just another level of pressure. It would mean the US federal rates would go to 5.5 to 5.75%, which is the highest it's been since 2007. And if we remember back in 2007, that was just before the GFC and the start of a recession.
We've only got 30 seconds left, but what does this all mean for Australian investors today?
Yeah, we are starting to finally follow suit too. So we are going to be down today. We were down yesterday, but it looks like actually having a really big stumble because not only that, UK inflation was much higher than expected. So watch a 1% fall on the ASX today.
All right, watching that closely. Evan Lucas, good to speak with you. Thank you.